Inspector, happy Mother's Day. I apologize. I probably should have made this video maybe yesterday. So if you're like me and you're a last minute type person, you'd watch the video, realize that it's Mother's Day this weekend, and you could have gone out and got a gift real quick and get out of trouble. So if this is the first time you're realizing it's Mother's Day on Sunday afternoon, Sunday evening, sorry for you. I'll pray for you. But and it's extra for me because it's actually my mom's birthday too. So I'd be in a ton of trouble. So today I'm going to be talking about the holdings for ULTY going into the week. We'll just look at the positions they hold, the options, take a look at how far in or out of the money they are, how things are looking for the week ahead, and then I'll also just update on the trades that I made during this previous week. Trying to take a little bit of feedback from the different comments that were left. Try to speak a little louder and clearer. It's not 11 o'clock at night, so I can talk a little louder here at my house, not worry about waking anybody up. And I increased some font size on a couple of the spreadsheets. So before I get into it too far, I just want to thank everybody that's here coming over from Retire on Dividends. I watch his videos anyway, so I see what he says. But he also sent me a message letting me know. He gave me a official shout out, and just want to show you guys, how big that is. All right, so as you can see right now, I've got about 1,000 views, and he gave me the shout out on Saturday, and on Saturday I got pretty much half of the views that I've had in the total time. Now I just made the channel about a little over a week ago, but still to basically double in a day. Same thing with subscribers. Right, I'm up just over 100 subscribers. I think 122, and I got almost 50 of them the day he said it. So big time appreciate him. He helped me right off the bat. We talked just a little bit before I made the channel. He gave me some pointers. He watched my terrible videos and told me what to change. So I love the guy. Definitely appreciate the help. So all right, so we're looking at ULTY, YieldMax Ultra Option Income Strategy ETF. On a daily basis, we'll go over the trades that they made during the trading week, and then I'll just try to give you a Sunday, whatever, before Monday starts, just a look ahead for the week, so you know what kind of trading ranges you're looking for stocks to trade in to know that we're going to win some trades. So we will look at the holding. So now the only thing with being zoomed in so far is it gets, these are the trades. It gets a little harder to get everything in the screen, so I'm kind of going to have to go back and forth a lot. So before we move down, right, we picked up, or there's 3.1 million more outstanding shares than there were on the previous day. So on Friday, 3.1 million more shares were sold. It gives them more money to trade with, all right, but at the same time, it's going to make how much we have to divide the profits by. Hopefully it'll be a wash, or maybe even the more money they get, the more money they can make, and we'll do better. But time will tell. So let's get into it. First one off, AST Space Mobile. Their larger position in a $26 call, real close to at the money with a $25.76 close price on Friday. So we really need this stock to sit still all week, or even go down a little bit in order to not end up having to pay a lot of money to close these out. The 2850s in better shape, 10% out of the money. I'm not going to sit and talk about how far out of the money all the puts are. They're basically, I know it's a collar when you sell a call and buy a put, but it's more of a protection plan because we make money on the shares themselves when the stock goes up. Even if it goes past our calls, we'll end up making more money on the stock than we lose on the calls to close them out. But on the reverse side, if the stock goes down, they'd rather have a way to make money. So these are more for protection. If you watch any of the trade day videos, they're usually getting closed out for pennies. A lot of times they even cost pennies to start. So with that being said, we're really concerned. Here's where we make our money, right? We sell these. So when you see these negatives, if you haven't traded options before, if you sell a call, if you open up an option by selling, then you're going to have to buy that many back in order to close out that option. So when you sell, you end up actually showing that you have negative contracts. All right, so that would be the cost to close it out. So it doesn't actually mean we've lost that money. We actually brought in money from that, and as time moves on, it decays, and we get to keep more and more of the premium, so long as the stock price doesn't go beyond that strike price where we set the call at. And then if it does, right, then that's when it starts to hurt. So next one up, Alibaba, sitting at 3.5% out of the money at $130 strike. Wouldn't call it safe, but it's not necessarily in danger either, so that's not looking too bad. Webull is a brand new one. If you watched Friday's video, they bought into a few more stocks, Webull, Kava, and Snowflake, and they got out of Cloudflare, which was ticker symbol NET or NET. So Webull, they set the call at 19. So their puts are more valuable than the calls at this point. But so with that being said, if that stock were to trade in this range or stay low, you'll end up keeping all the money from the sale and then actually making some money on the back end. I don't think they're really ever planning on making money on these puts that they buy. They're a protection plan, so anything you get back at the end is bonus. I actually looked at starting an option trade on that company about a week or so ago. They have very high volatility, so you get a lot of premium when you sell their calls and puts. Kava Group, I'm not as familiar with, but they sold their calls at 102, stock price at 93, so they're about 8% out of the money. Looking good for now. Coinbase, 6.2% out of the money with a 212.50. Any type of those, what do you call it, crypto? Never safe. It could always explode at any moment or drop big time, but 6% looks okay. Carvana, I believe, yep, this was the one they cut their shares in half. So they used to have 50,000 shares, sold 25,000 of them along with Cloudflare. That's how they came up with some of the money for these new positions, along with selling 3.1 million more shares to bring in some money. They have 250 contracts at $300 call, sitting at 268 over 10% out of the money. Those are looking safe. These are just our treasuries. I believe this is where our distributions come out of, because last time they got paid, it was roughly $4 million that had to be paid out to cover that distribution, and roughly $4 million was the drop in a single day on that fund. So I could be wrong, but that's just kind of looking at the numbers. First Solar, they've got a 146 call with a 140 stock price, 3.6% out of the money. Not safe, but could be worse. Hims and Hers, this one beat us up a lot last week. Lost a lot of trades on them. They just kept on going up. So they have 56 and 57. 57, the further one out, the much larger contract. That's nice for us. 8.8% out of the money and 7.2. Hopefully their big run's over. Maybe you own that stock, though, and you don't want the run to be over. But those look okay as long as we don't have a week like last week. Robinhood, $56 call with 2,100 plus contracts on it. They're only 2.4% out of the money. We'll see if this stock, we're going to need it to stay flat or go down to be able to close these out for a win. IONQ, they kicked my butt. I'll show you towards the end of the video on my trades. I thought I was doing good all week, and then Thursday and Friday happened. But $35 call. Don't get a lot of money for them. You can get a whole lot of premium selling them a few dollars off of their their current price, but forgot my highlight. But they're 10.6% out of the money. Seems okay. They kind of stay in a range for a week or two, 3, and then once they move, look out. So they just kind of moved up to this breaking 30 range. So we'll see what they do. Obviously, Quantum was in the news a little bit last week, and they had a good earnings call. Mara Holdings, 1576 current price with 1750 call sold, almost 10% out of the money. Seems pretty safe. MP Materials, $21.95 current price with a $23 call. That's pretty close, 4.5% out of the money. Time will tell. MicroStrategy. If you watch this, I mean, this is why the MSTY fund makes so much money, even if they're not doing well on their options, because their synthetics just go through the roof because the way this has been on a tear. It's at $416 right now with a 430 and a 435, 3 and 4% out of the money. They've been moving more than that lately, so that could end up being trouble. Hopefully not. Nvidia, 116, right? They keep going back and forth down to around 100 up to around 120. They can't figure out if they want to stay in that range or take off. So with a 120 call, that's only 2.8% out of the money. Another big stock that moves by a lot when it goes. So I wouldn't call 2.7% safe. Oklo, 28.09 current price, $30.50. I think they moved that up about 50 cents from last week's. So I think they were winning these trades, but about 8% out of the money, looking good. Palantir, they have 2. No, they have 3. Sorry, 120, 121, and 125. The 120 and the 125 are about even. The 121 is kind of smaller, 100 contracts that are sitting at 2.2, 3.0, and 6.1% out of the money. So the 2 and the 3, they could end up in trouble. We'll find out. Reddit has a 114 and a 115 with a stock price of 108. That's 4.8 and 5.6% out of the money. The good thing, right up, we had AST is real close to the money, but still out of the money. We haven't had a single one that's in the money and already in trouble yet, so that's good news. We're getting ready to get to 1, but it's okay. So that's, man, right before I made this video, I said I got to look up how to say this, and I still forgot to. Rigetti, 1050 call, right? We just started this last week, new stock, and already we're in the money, which sounds like a good saying, hey, we're in the money, but not. When you sold a call, you don't want it to be in the money. You want it to expire worthless, so you get to keep all the premium you collected on the sale. So, but this is another quantum computing stock. It's not quite as big as some of the major ones, so kind of gets hyped up, and then seems like it gets pumped and dumped a lot. So maybe it's about due for a little bit of a comeback on the way down. I mean, not comeback. RH. 205 strike price with a 194 current price, 5.2% out of money. Looks pretty good. SMCI, Super Microcomputer Inc., has a $34 call. Not one, 1,350 contracts. Almost 6% out of the money. We like it. Snowflake, this is a new one. 182.50. That's not what I wanted to do. All right, with 174 current price, it's about 4.5% out of the money. I'm not sure how much this one moves yet. We'll find out now that we're new in them. The Direxion, 3 times leveraged small cap bull fund, 2770 current price, 30 is the strike, 7.6% out of the money. Normally 7.6% sounds like pretty good, but on something that moves 3 times what the market does, it only takes 2.5% before this one's at the money. So we'll see. Same thing goes for ProShares, triple leveraged. It's at 58.97 with a 62.50 call, 5.6% out of the money. Same thing, that could get wiped out in a day. So we'll see. Tesla's had a good week, a good couple weeks maybe. 298.26 current price, 315, 5.3% out of the money on those contracts. Upstart, I have these guys in my 401k. I can't trade options on them. I'm holding them, but I'm a bag holder on that. I got into them when they were much more expensive. But 47.17 is the current price. $51 is the strike price on the calls. 2,200 of them. 7.5% out of the money. Hopefully that'll expire worthless. Vertiv Holdings, $98 strike, $94 current price, 4% out of the money. And Vistra Corp, 142 on the strike price, 135 current, 4.4% out of the money. And I can't figure out how I want to do this, right? So I like to show you guys, I like to have this option over here. So at the end of the day, I put in the close. You get to see the percent change on the stocks. You get to see how much it goes up, right? So then I build these percentages, how far in or out of the money they are, off of how it closes. So these are all related to today's closing price. So then I update the previous close after I've done the video, after the market's closed. I bring all these over, but I don't want to zero these out, because then these would all show 0 or trying to divide by 0, depending on if it's a call or a put. So I end up always have something on my screen where I say ignore that. So on the end of day things, I say ignore this. These are the current prices that it closed at, and then afterwards now I'm saying ignore that. And that's why they're all at 0. So it's all ready for new updates tomorrow after the trading day ends. And then we'll get to see how much money they go up or down. So the NAV, the net asset value compared to the stock price, they're very close. $6, $6.02. It'd be really nice anytime. Now, this isn't financial advice, right? Because that would be trouble for me trying to give people financial advice. But what I would say would be a good idea or a good practice, if any time you catch the price lower than the NAV, then it's got to be a good deal. You're literally getting to buy the company for less than what it's worth. But we know that the value changes on the minute while the market's open. So trades, we already talked about them on Friday. So as of right now, we are winning for the week with a great day on Thursday, right? So we have Wednesday, Thursday, Friday. We'll get Mondays and Tuesdays trades in on Tuesday. I'll tell you how much they made overall. I'll divide it out by how many shares are outstanding. We'll make a guess at what kind of a payout it's going to be. I don't think we're going to have to come up with a percentage. Maybe we'll come up with a high and a low. So we'll say the total amount they make divided by the amount of shares, that'll end up being the high, and then we'll maybe take a percentage of that to make it our low or maybe a realistic guess. I know some of the other funds tell you that they're going to pay out 90% over the year. I read through where's my tab? Because I was bored one day. I just wanted to see if they make any of those kind of claims. So I read through the prospectus. I read through the summary prospectus. They don't make any claims like that. So they don't tell us what amount that they're paying out in X amount of time. And it would be tough, right, on a weekly basis anyway. So I thought I wanted to tell you something else about the prospectus when I read it, but I'm not thinking of it right now while I'm recording. As soon as you get to the ETF inspector, it's still Mother's Day. Having some technical difficulties. The videos are cutting out in the middle of me making them. So that'll just have to be a part 1 and a part 2. I apologize. Hopefully you stick around for both of them, but I understand if not, I don't know what's going on. So I'm going to try and not get my mouse anywhere near the top of the screen because it keeps on ending the videos. So We talked about the holdings. If that's all you came for, thank you for watching. If you're interested in my trades, it's not much, but I'll show you what we did. So in my dividend account, so I did receive my weekly dividend from YMAG, $21.18 on 200 shares, and $35.43 on 300 shares of ULTY. I was talking, I don't know if I said it in the last video or if it was in the comments. I'm actually thinking about selling my YMAG and buying YieldMax. I think they get a little bit more premium at an actual lower price, but I'd end up having to sell these at a loss, which I really don't like doing. And at the same time, USOI is a fund that I've been in for a long time. They trade covered calls on USO, the oil fund. Don't make as high of premiums, and value of the fund has been dropping a lot lately. And with roughly a little over $5,000, close to $6,000, I think I want that kind of money in PLTY, because they've been making a killing, especially if you watch Rod's videos this week, or this past month. I mean, they've just making an enormous amount per share. So in this one, if you watched, I lost my MSTY shares by selling a call. I bought them when the stock was at $19.75. I sold a $23 call. Thought that was safe. It was 16.5% out of the money. I was just trying to collect an extra $20. That ended up making me lose my shares and miss the most recent dividend. So I'm done crying about that one. But I went back in. So I sold a put, and I don't want to buy back for more than what I paid for. So I sold a put at the same price I ended up having to sell the shares for, 23. The stock was at $23.74, so I was able to get 30 cents for it per share, which would be $30 collected. So I'm hoping that MSTY goes down. And I only sold one for 1 week because I'm going to aggressively keep trying to sell these real close to the money. I want these shares back before the next dividend. All right, so that's it for the dividend account. Not really dividend account. My dividend stocks are in the same account with my other options. I just kind of separate them a little bit on how I play with them. I only have one wheel going. So if you're not familiar with a wheel, you sell a cash secured put. When that gets assigned, so you collect your premium selling. If it gets assigned, then you just start selling covered calls, and you just keep on rolling back and forth. That's why they call it a wheel. So I got assigned IONQ at $39.50, and at 39 and at 35. But through selling all these options, I actually am down to a cost basis of $5,500 for the 200 shares. So that's like what's that, 27.50-ish, 27.75 per share price. So that's not bad. So this past week I was excited. My options were expiring. My calls were expiring, $30 calls. It was sitting at 28, 29, perfect. So on Friday, all that extrinsic value was going to burn off, and I was going to get to sell a 30 for the following week and collect lots of premium. Well, that didn't happen because on Thursday and Friday, the stock took off, and so I ended up having to buy to close for $2.38 a share. And then I sold to open the next round of calls a week later for $2.98 a share, 200 shares. So overall, I still won, right? So that's $477 that I paid to close it, and $594 to open it. But it was going to be a lot better profit if the stock didn't jump those last couple of days. But like my brother told me, we're not trying to make all the money. We're just trying to make money. So that's a good outlook on things. Hopefully he's watching and likes that I use the line that he taught me. But So we'll see. And I bumped these up a little bit instead of 30, 50, because I don't want to lose the shares. I like selling the calls on them a little bit better. But all right. And then I have 3 poor man covered calls. If you're not familiar with what that is, you buy a leap, deep in the money, long term, far out. So I have one for Intel, one for SOFI, and one for APLD. And then you sell calls off of that, and you're not trying to let those get assigned because you're trying to basically just make money. It's basically a way to sell calls off a stock you don't actually own. You didn't have to fork out all the money to buy 100 shares of it in the first place. This is kind of experimental. This is my first few months trying this method. I got into these when stock market took a big tank with the tariff talk. So I didn't make any trades on this. These expire 5/23, so I probably won't end up making any trades on it again unless the stock moves so much that I can close these out real cheap. I only got 16 cents a share on that one, so I would probably close that out if I could get it for maybe 2 cents. I like to make 90% of the money. That's just me, though. APLD, again, expires on the 23rd. Probably not going to get a chance to close these out this week. I'm only going to want to pay 1 or 2 cents to close these out, so I'm going to have to wait a while for that. And then SoFi is a week further out. This is because these actually jumped above my original call strike price, and so I had to roll them to a higher strike price, and it took going out further in order to collect some premium. All right, so we talked about my trades and we talked about the holdings. We're ready for the week, and I will now give you the dad joke of the day if you stuck around this long. All right, so a ship carrying red paint has collided with a ship carrying blue paint. Both crews are said to be marooned. Cheesy as always. Okay. Thanks for coming around. Please like, share, comment if you like some of the changes, if you want to see some other changes. I try to get to all the comments. There's 100 subscribers right now. If I ever made it to be as big as Retire on Dividends and I got 30,000 people watching my videos, I'm sure I wouldn't be able to keep up with those comments. But for the time being, I'm going to try. Thank you, everybody. And go spoil mom. Talk to you tomorrow.